Good everyone, this is your European Open briefing for Friday, September 30th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we've got a bit of risk aversion today as the risk appetite following the oil deal on Wednesday wears off, but also we've got ongoing concerns about what's happening in the Eurozone banking sector, particularly with Deutsche Bank, and this has created a bit of risk-off mood on the last trading day of the month and of the quarter. We had some Japanese data out today. They were mostly on the negative side, though there were some positive figures out of China. The Caixin manufacturing PMI showed that Chinese manufacturing sector expanded slightly in September. In commodities, we've got crude oil prices slipping back on profit taking, but as you would expect, gold is up on the risk aversion. Now let's take a closer look at the Japanese data. The big disappointment was, of course, household spending, which slumped by 3.7% over the month in August. This gave a year-on-year drop of 4.6%, so that doesn't look too good for Japanese GDP figures. Consumer prices also slipped further into negative territory. Core inflation fell from it was unchanged at minus 0.5%, as opposed to expectations that it would ease to minus 0.4%. This puts more pressure on the Bank of Japan to come up with yet more stimulus measures. Unemployment also disappointed. It ticked up to 3.1% against expectations that it would stay unchanged at 3%. The only bright spot was industrial production. It jumped by 1.5% over the months against expectations that it would rise by a more modest 0.5%. And at the bottom there, we can see the Caixin manufacturing PMI pretty much in line with expectations at 50.1. Now looking at the dollar-yen pair, we can see the dollar come off yesterday's one-week highs. We had some positive data yesterday. US GDP for the second quarter was revised up. Jobless claims also continued to point to ongoing tightening of the labor market, but the dollar it found itself back below the 101 yen level today. The yen has pretty much reversed now its losses. It's gone back up again due to the risk-averse mood. We had the release of the summary of opinions of the Bank of Japan September meeting, and that showed that there was some divisions. Some board members within the bank doubted whether or not the policy overhaul of targeting the yield curve would be effective. So that has created some upward pressure on the yen as markets continued to doubt the Bank of Japan's effectiveness. Yellen was speaking yesterday, but she did not comment on monetary policy, so there was no impact on that on the currency markets. Now let's have a look at the euro versus the Swiss franc. The Swiss franc, along with the Japanese yen, is up today due to the risk-averse mood. The main reason for this is, of course, what's happening with Deutsche Bank. Its shares plummeted 7% yesterday in US trading. There's some serious concerns whether or not Deutsche Bank will be able to pay its huge fine in the US. The bank has already had a capital shortfall even before the fine was imposed, and there's also there's concerns that if Deutsche Bank goes under, it could trigger another banking crisis within the Eurozone. We saw the euro versus Swiss franc drop to 2 months low today of just about 1.08 francs. The US dollar is also down against the franc at a 1 month low today. The euro and the pound are weaker against the greenback today. We can see here the euro has slipped below the 1.12 level. We had some comments earlier today from ECB Governing Council member Ignacio Visco. He said that the QE program is likely to extend beyond March 2017. Previously, Governing Council members had not really commented much whether or not the the QE program would continue beyond March 2017, even though it's widely expected. So this has put also some further downside pressure on the euro. Now going to the pound slipped below the 1.30 level yesterday. It's remained below the level even though we had some better than expected consumer confidence data out of the UK earlier this morning. Now let's take a quick look at commodities. Oil is slightly down from yesterday's highs, though not too much. It's holding above, US crude is holding above $47 a barrel, but this is mainly due to some profit taking due to 2 days of sharp gains. Gold, on the other hand, it fell over the past 2 days due to the risk-on sentiment, but it's up today due to increased risk aversion, along with the yen and the franc. It's last trading at $1,326 an ounce. Now it's going to be a busy day for data, both out of Europe and in the US. We already had some German retail sales data, which was slightly weaker than expected. We're going to have the third revision of UK GDP for the second quarter, which is expected to remain unrevised. We're also going to have the flash readings of Eurozone inflation for September. Consumer prices in Eurozone are expected to they're expected to go up from 0.2% year on year in August to 0.4%. If it meets expectations, then that will be good news for the European Central Bank, that its policies are finally pushing up inflation across the euro area. Now looking at US data, we've got all important personal income and personal spending data. They're expected to ease in August compared to the previous months, but it still should expect to remain positive. We're also going to have some Canadian producer prices and monthly GDP figures. And then late in the US session, we're going to have the University of Michigan final reading of the Consumer Confidence Index. So that's it from me today. Thank you very much for watching and have a great day.